Hey everybody, Dr. Richard Smith here with the Foundation for the Study of Cycles. And as you can tell, I am not in my normal environs today. I'm on the road, but so much going on. I wanted to at least get on briefly, kind of update our narrative and thesis and take a look at what's going on. So good to be with you all today. Sorry if there are any technical glitches. Lighting's not perfect. I know it's not the perfect situation. Dog may bark. She's here with me, traveling. And but let's jump into it and just get right there. Just note, though, that our conference in New York City is filling up fast and limited number of seats. It's going to be an unbelievable few days in New York City. I hope you'll join us live in New York City, live in 25 June. Don't want to be anywhere else if you really want to go deep on cycles. So with that, let's jump in. And let's see here. All right, so I got to go. Sorry, I'm going to do some might be some infinite screen action here, or Dan, you can just do it for me. All right, so I'm just on one screen today, so it creates a little bit of a challenge, but hopefully we're good and you're seeing this. If not, let me know. So we've been talking for a while about where we are in the cycles and the big picture, developing a narrative. And last week we talked about bye-bye or bye-bye. And we said on the short term, looks like a buying opportunity. And indeed, if we look at last week here to today, that's where we are. Sorry, excuse me, just 1 second. Live stream in a hotel. All right, so we have gotten a good bounce. The question is, are we going to see follow through? I'm still suspecting so. The two strongest cycles here on the daily chart are the 180-day and the 71-day right here. You can see them clearly in the spectrum. And pointing up into at least the end of April, if not even early July. So that's pretty contrarian to the current narrative. But getting back to the current narrative for just a minute, wanted to share this chart with you. This is AAII, American Association of Individual Investors, bears minus bulls, okay? And when you get up here near the top of this line, that is a means that the individual investors are very bearish. In fact, they're as bearish almost as they've ever been since September 22, and even back in October of 2008. So we are up at bearish levels not seen since a couple of huge buying opportunities way back when 2022 and 2008, okay? We're above, bearish levels from March of 2000, et cetera, et cetera. So that's very important to keep in mind. And just a reminder about this buy and sell system on the S&P 500 that I shared last week. You can watch the show last week if you want to see more detail. But it's still not giving a sell, and it's a simple system. It just looks at the yield curve uninverting, And this is the 10-year minus 3-month Treasury yield spread. And we see here at the moment, we've just gotten above the zero line again, but that has to hold for 100 trading days. So another 5 or 6 months before that could turn, before that could say, you know, recession likely here. And the S&P 500 daily data below its 200-day moving average. We did pop briefly below, but we're back above now over the course of the past week. So still a long way to go for this system to give a sell signal. We all know that the weekly cycle has topped. But we also know that sentiment is extremely bearish right now from the individual investors. That's usually a buy signal. We talked about this last week where the 2-year T-note yield kind of anticipates the Fed funds rate, leads the Fed funds rate. We can see that the 2-year T-note here yield is about 4%, whereas Fed funds is 4.25%. And the trend is down, clearly. Talked about this last week too. Trend in the 2-year T-note yield. Yields are coming down. I don't expect that trend to stop soon. I'm expecting yields to keep going down. I know that's a contrarian view, but that's what I'm seeing. That gives room for the Fed to cut. So I don't think we're on the verge of a huge inflation scare right now. If anything, I think we could have a deflation scare rather than an inflation scare. So right now, I still see 2-year T-notes yields coming down, Fed funds coming down. What else do I got here? This is the smart money on the T-notes, okay? Commitment of traders, commercials, buying 2-year treasuries. That means yields go down, okay? Buying, when prices go up, yields go down. So still seeing room to the downside on yields, which gives the Fed room to cut, which could be, you know, a risk on perception in the markets. I don't expect it's going to last for more than a few months, but I am still expecting further upside here in equities as well as in bonds. You can see here the longer term, these are the 6.5 to 10-year. This would be TLT in an ETF. Also being bought by the commercial participants in the futures markets. So more indication of strength in bonds, in treasuries, in the US treasuries. So that's the big picture. Cycle-wise, on a daily basis, right here, we've looked at this one already. This is the E-mini S&P futures. We've got a clear bottom. We had a huge drawdown in negative momentum and a big reversal crossing through the cyclic RSI boundary. Let me see if this makes it bigger. Yeah, okay, so now we can see down here, we've actually got a buy signal on the cyclic RSI. Here we are in the early stages of strong cycles with a big momentum reversal, giving a buy trigger now by crossing inside the bands from outside the bands. So the bulls definitely have the ball right now. If we go to the 2-year treasuries, okay, very clear cycle on the daily data and the 2-year treasury futures here. Doesn't get much clearer than this. 175 days, Bartels of 91, strength, the number one strength, the number one amplitude. Okay, this is a strong cycle, and it's clearly got room to run. So tailwinds from the cycles showing bond or 2-year treasury prices going up, which also confirms yields going down. So if we see inflation surprising to the downside, okay, the Fed says, woo, we can lower rates, it's risk on. Meanwhile, we suspect longer term it's a sign of problems, but in the short run, it could be a huge relief rally, and that's what I'm leaning towards. The dollar, kind of the key components of our thesis is around equities and rates and the dollar. We can see the dollar here. Not sure why the cycle's turned off, but the number one cycle here, 139, maybe this 115. All of them suggest the dollar bottoming. Could we see equities going up, the dollar's going up, and 2-year treasuries going up, aka yields going down all at the same time? Yes, of course, we could. And that's what the cycles on a daily basis are suggesting strongly. Just glancing at a few other daily cycles here. Gold, we looked at this last week. The cycles are kind of muddy on gold on a daily basis right now, at least on the gold futures. So nothing really jumping out here. And gold has been kind of just defying the cycles on a daily basis for a while now. And you see a lot of the cycles turning red, negative here because the move up in gold has been so strong. That happens sometimes. I'm just not seeing a real edge with the cycles on a daily basis on gold right now. All right, copper, I think, is interesting. Copper has some of the strongest cycles that I know of. Very cyclical asset, and we've got a couple of very strong cycles. The number one is 191 here, right? And then also this 290 out here. But on the shorter term, on the daily cycles, copper showing a double top as well as a pretty big momentum divergence, right? If we go back here and just zoom in a little bit, right? We've got the momentum way up here. Now we've got a new high in price and a significant momentum divergence. So doesn't, the momentum's still going up, but we've got a momentum divergence. Could see some more upside, but overall starting to look for a short in copper. And then Bitcoin, of course, this 97 or 100-day cycle, half of the length of the nominal 200-day cycle that Lars has talked about so much. In an up phase, coming out of a cyclic RSI buy signal. If we zoom in here a little bit, okay. So we've got a buy signal here on the cyclic RSI coming up inside the bands. A strong cycle suggesting further upside, price starting to turn up, momentum starting to turn up. Overall looking pretty good. All right, so big picture, don't see recession. I see rates continuing to go down. Cycles are suggesting a significant bottom in equities. Small investor sentiment is as bearish as it's been since the bottoms in 22 and 08. We've seen a lot of talk from the new administration. Not a whole lot of changes yet. So there's a lot of narrative in the air and not a lot of huge decisive actions. I know that there are changes going on. I know Germany is spending again, right? But that's a good thing. US exceptionalism can still continue. And if the rest of the world starts to spend like the US spends, that's actually a good thing overall. So I don't see that the sky is falling today or tomorrow. I think the narrative has gone too far. I think that at least for a short-term trading opportunity, there's still more room to run in this rally. So let's now just go down to some shorter-term time frames and look and see if we've got some other opportunities here. All right, so here we are. Well, this is hourly data on the S&P 500. So I covered this last week. I showed how like the past 5 weeks in a row, the hourly data on the E-mini S&P 500 futures haven't been working very well. The cycles have been kind of deteriorating. This is where we were last week. Okay, with the strongest cycle, which is this one around 123 or so. But you can see it's just kind of choppy, muddy, not a whole lot of great signals here on the hourly data. We did say, on the short term, it was a buy. And indeed, it's been going up nicely since that time last week. If we look at the hourly data here on the E-mini S&P today, the cycles are pointing down, right? So this they're starting to get a little more distinction, a little less muddy in the 60 period cycle on the hourly data, and this 123. 123 is 1 week, basically, in the futures markets. 5 times 23 is like 115 hours a week in the futures markets, 23 hours a day. And, the cycle suggests that the momentum is just pushing up, right? New highs in momentum, new highs in price suggests some, headwinds into cycles here, but I don't see a great setup for a buy or a sell right now. I hope you got long last week. I wouldn't be getting short here right now just based on the cycles because momentum is so strong and the hourly cycles have been a little inconsistent over the past few weeks anyways. So short-term basis, not really seeing an edge here. We could be sideways for a bit here on equities. Just looking for a trade. I'm looking for a trade, about a week-long trade. What's the best trade I can find given my macro views of what's going on in the markets? Okay. Copper, as I said, lots of good cycles in copper, right? Here, this 266 period cycle on the 2-hour data in copper has a huge Bartels, 93. If we look at it, it's bearish, but maybe there's an edge here, maybe there's a trade here. I just hate shorting into the face of this kind of strength, right? But we definitely see some strong indications from the cycles of at least flatlining, if not going down, and momentum is starting to deteriorate, but I wouldn't be putting a big short on copper here, but maybe starting to leg into a short opportunity on copper could be interesting. This is the 2-hour data on the S&P 500. Again, the futures data. We see a nice, clear, strong cycle here at 263 and at 164. In fact, let's add in that 263 cycle here. So again, the cycles, shorter term, intraday cycles, 1 hour, 2 hour cycles on equities are negative, but again, momentum is still way above the bands, has not given a sell signal. I do not think this is a great shorting opportunity. Bitcoin on the 2-hour data also got some headwinds from the cycles here. Very clear cycle on the spectrum here at 132 periods, a little longer than a week, maybe a week and a day, basically in the futures markets. And I like the futures markets on Bitcoin because, it gets rid of the weekend action, which I think is more subject to manipulation, frankly. So I find the futures data to be more reliable on Bitcoin. Very strong cycle in the 2-hour data on Bitcoin, also suggesting some headwinds. I just don't really feel great about shorting Bitcoin right now. So not looking like a great trade to me. The dollar on the 2-hour data showing some a very good cycle here, 176 periods. It's at a week and a half or so. Not seeing, suggesting some headwinds for the dollar. And the momentum is also suggesting some headwinds as well. So shorter term dollar looking like it could see some weakness over the next week or so. Still not crazy about a short there. Here's where I'm starting to get interested. The euro futures, 2-hour data. We've got a couple of very strong cycles here. The number one, 84 period, and the number 295 periods. And both of them bottoming, along with momentum being outside the bands. Might wait for momentum to turn up a little bit, but in terms of a short-term trading opportunity, this is the one that looks most interesting to me out of all the ones I've seen this week. 2-year treasuries also coming into some cycle bottoms here. The number one cycle on the 2-hour data is the 66 period cycle. Very strong. Bartels, pretty clear on the spectrum. Good strength. So that and momentum coming out of the bands, but not having entered back in yet. So that's another one that I think could be an opportunity. Buying the 2-year treasuries, the CPI comes out tomorrow. Maybe there'll be a downside inflation surprise. I wouldn't be surprised. I can't predict things, that accurately. But I just wouldn't be surprised by a downside inflation surprise tomorrow, which I think would unleash a rally in 2-year treasuries and more of a risk-on opportunity that would affirm some of the bullish cycles we're seeing, especially on a daily basis in 2-year treasuries, in the S&P 500 futures, in Bitcoin, etc. So that's what I'm looking at. Let me get back to hopefully not a bunch of screen infinite screen regresses here. So I think I'm gonna leave it at that today. I just wanted to get on the record and not leave things for another week because there's so much going on in the markets right now. Hopefully that came through okay. I'm on my laptop. I'm not in my studio. So I hope that came through all right. If not, we'll get it back on for you later. So any quick questions? Let's see. Just scrolling through, seeing what I missed here. Not sure why. Let me try stop screen. Oh, okay. Okay, Linda Rashke. Oh, thank you. For some reason, again, I'm not in my normal environment. Sorry about the technical difficulties. There we go. Southern Brazil. Linda Rashke, thank you. And welcome from Southern Brazil. Thanks, Douglas. No, not sure what I'm doing wrong here, but my comments aren't showing up. So Edward Samokolov, noticed in the past, Euro USD often runs up together with US indices. Could be. I like the fox. I do have some correlations. I do study correlations. Yeah, I don't have the facility to really look at that today, but I wouldn't be surprised. All right, looks good, everybody. Thanks for your patience today with the issues and the live streaming from a remote location. Overall, I think it went pretty well. I'm looking for more upside in this rally. I'm looking for some of the narrative to get undone, and bit of a risk on downside inflation, maybe even a deflationary scare. A lot of narrative going on out there. Try to use the cycles to see through the narrative and see where the narrative might have gone too far and creating an opportunity on the other direction. And I think that's what we're seeing now. Meanwhile, you do have to manage exposure. You got to manage your risk. You got to keep your bets a reasonable size right now. It's not a back up the truck moment. Maybe you want to leg into something over a month or two if we get a very surprisingly strong move to the upside, but be careful out there. We are living in dangerous times. Thanks, everybody. Hope to be back in my studio next week, and see you then. Bye-bye.